So Mika is officially live. And listen, if you hold XLM, if you hold XRP, XDC, HBAR, etc., you're going to want to stick around until the end of this video because we're now witnessing the paradigm shift. It's the shift around this space that we have been waiting for a very long time. And it's officially here. And we have to talk about it. So with that being said, welcome to the channel. My name is Nick. For everyone out there that is new to the channel, hopefully by the end of this video, you do become a subscriber. And if you guys are not in the free Discord, what are you guys waiting for? Join up. You won't regret it. First link down in the description below. So let's talk about this. Mika is officially live. After years of consultation, heated debates, contemplated Bitcoin bans, last-minute amendments, and countless votes, Mika now, actually since December 30th of 2024, officially applies to crypto asset issuers and service providers in the EU, even if the latter still benefit from national transitional periods. Mika stands as the world's most comprehensive regulatory framework for crypto assets with regulatory clarity and access to a massive single market of 450 million consumers. The EU has a unique opportunity to position itself as a global hub for crypto innovation. However, only time and the market will tell whether Mika can achieve its goals of fostering innovation, creating a competitive local market, and protecting EU consumers. A pragmatic and iterative approach to implementation will be critical. We should think of Mika as a V1.0, a foundation that must evolve to address emerging challenges and adapt to new business models. I still receive many questions about Mika's roles and potential impacts, so I'm resharing two of my Mika articles in the comments. A Mika primer covering Mika's origins, goals, and roles, which, by the way, you guys should go check this out. By the way, this is from Patrick Hansen, Patty_Hansen over on X. We also have a Mika market impact article co-authored with another individual exploring how Mika will transform the EU crypto markets. Last but not least, yes, it's pronounced Mika. Mika at a glance, one regulation to roll them all. And here we actually have the full breakdown of the asset categories, the issuer requirements, crypto asset service provider categories, and then also the CASP requirements as well. So listen, this is definitely the first of many, in my opinion, in terms of regulatory frameworks. But, you know, there definitely is going to be a lot of moves from this point on. Now, I bring this up because, yes, Mika is a very big game changer, but what does all of this mean for XLM, for XRP, and, you know, the utility projects that we talk about almost on a daily basis? Well, it's actually very beneficial for them. But let's talk about a few things first. Number one is Franklin Templeton. Guys, Franklin Templeton is one of the biggest asset management companies out there with 1.7 trillion assets under management. 1,600 investment professionals globally, 10 specialized managers joined since 2019, and 75 plus years of asset management experience. This is all very important to know because if we go over here, we have Franklin Templeton Digital Assets 2025 Crypto Outlook. And check this out. This got posted back in December. In 2025, the crypto landscape will likely see pivotal advancements shaped by regulatory clarity, institutional adoption, and technological evolution. We believe this will be led by U.S. regulators such as the SEC, enabling more diversified financial or investment products associated with crypto, such as ETFs or tokenized security products. Favorable regulation will allow the U.S. to reestablish itself as a global hub for crypto innovation. We see major TradFi players in crypto infrastructure begin to intersect. A stablecoin regulatory framework in the U.S. is anticipated and will open doors for major financial institutions to issue their own stablecoins. Tokenized products and stablecoin adoption will continue to expand and be major drivers of decentralized finance growth globally. Bitcoin will solidify its position as a global financial asset, acting as a digital store of value, accelerated by sovereign and institutional adoption. We expect to see strategic Bitcoin reserves added by several nations. Decentralized physical infrastructure networks will see heightened demand as industries prioritize decentralized and efficient solutions for real-world applications like logistics and Internet of Things. We will see the convergence of AI and crypto accelerate, with blockchains providing transparency and verification pivotal for expanding the AI-driven economy. AI agents will utilize blockchain rails to automate on-chain transactions and portfolio management, as well as merging digital content and social media with on-chain activities. Overall, 2025 will mark a shift from speculation to utility. As crypto's foundational technologies become integral to global financial and operational systems, stakeholders should watch regulatory developments, institutional moves, and advancements in AI crypto convergence to navigate this dynamic landscape. And listen, when we think about what is going on right now, this is one of the largest asset management companies in the world telling you exactly what's going on, what's changing, and what to expect in 2025. And it feels as though 2025 is the year where we finally see utility taking center stage. I want you all to understand the opportunity that is being presented to you right now in front of you. This is going to be a massive year for utility projects, for institutional adoption, and just evolution of this entire technology asset class. Strap in. And I'm telling you guys right now, buckle up and prepare. You must have a plan in place because a lot of people, and I mean majority of this space, is not prepared for the path that we're about to go down. And I gotta say, it goes back to early November, and I was noticing this as well, but Altcoin Cycle put out a great post regarding it. And we have unpopular opinion, but the new administration will be bullish for utility tokens and bearish for memes. It will soon be easier to raise money, launch without complex legal or funding structures. It'll also be easier for teams to creatively add value to holders. This should result in an increase of quality projects launching, which should, as a whole, decrease pre-launch valuations and make it more attractive for smaller fish to speculate on early-stage projects similar to the 2016 ICO boom. If this happens, we'll see a meaningful rotation of liquidity out of memes. Another prediction: accredited investor laws will easen, which should only further contribute to my thesis above. Crowdfunding platforms will likely benefit from these changes, while VCs will need to become more founder-friendly in order to retain high-quality deal flow. In general, I'm very optimistic for smaller fish and those in early stages of building wealth. The days of institutional money gatekeeping good investment opportunities are likely soon to be over. And listen, yes, the entire space right now, guys, I would be very bearish if your project does not have real world utility tied to it or any utility tied to it, because we are changing the entire game right now. The entire space is changing. You need to lock in. And even over here, we have from Smoke Dog, pay attention, 91% of institutional investors invest in layer 1 blockchain protocols. Securitized CEO, I don't know anybody that uses a private blockchain if they have the option to use a public blockchain, which is crucial to focus on, because guess what? This means that utility blockchains, the XRP Ledger, Stellar, XDC, HBAR, these are, blockchains, technically, Hedera's Hashgraph, but these are projects that are going to be utilized because they are public. They're not closed off. They're not walled gardens. Now, we also have in document form, Ripple's XRP Ledger has positioned itself as a public blockchain that is among the fastest, low energy, and carbon neutral, which it definitely is. But within this, we actually have most institutional investors, 81% said better information on crypto will lead them to invest more, signaling a shift from regulatory concerns to market-specific risk, strategic planning, and technology deep dives. Could actually see here blockchain protocol tokens 90%, stablecoins 50%, tokens of decentralized applications 40%, NFTs 39%, private company issued tokens 11%, and tokenized assets 6%. 91% invest in layer 1 protocols. Over here we also have, and let me zoom in real quick. By the way, this is from Casterman Advisory. If you guys know, ties right back to XDC. Here we also have Ethereum, Avalanche, Polygon, and XDC. This is under securitized. I don't know anybody that uses a private blockchain if they have the option to use a public blockchain. Benefits of public blockchains: increased transparency and instant redemptions recognized by the market. Public blockchains can be considered general purpose technologies with many potential use cases ranging from payments to video games to digital identity systems. Tokenization is one of the many applications of public blockchain technology. It refers to the process of registering asset ownership on blockchain infrastructure. Benefits of transforming asset ownership into blockchain-based tokens include settlement efficiency, programmability, accessibility, and lower costs. And we already know tokenization is an absolute game changer for TradFi, for traditional, assets. It's only going to continue to become a big, deal. In my opinion, trillions of dollars will be on chain by the end of, I honestly think that's going to be by the end of 2025. If we have regulations in place, trillions of dollars will flood on chain very fast. But I also said over here, and This is from December 21st. I reposted this. Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services. You guys already know about this post. I included it in a video before. This is a quote from Franklin Templeton themselves. This is the CEO, Franklin Templeton. And I even said that this quote lives rent-free in my mind every single day since I've heard it. Most of the participants in the space don't even realize what is happening in real time. Utility-based blockchain projects are becoming intricate pieces of the global financial system. I keep mentioning all of these great projects. Look at the market cap valuation now. Look at what Bitcoin is worth today, market cap-wise. The argument for maxis is that Bitcoin will never be flipped, that it will always remain in the #1 spot. The institutions are force-feeding retail the Bitcoin hype. However, a few like Franklin Templeton are telling you the truth. Don't miss the target. There are tons of distractions in the space outside of Bitcoin, like meme coins, for an example. Block out the noise, research, study, and everything will soon start to make sense. Now, I'm going to play this real quick. If you guys did already, hear this, it's okay. You guys can skip ahead a little bit, but listen closely.
Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services. I think AI is probably the other big disruption there, but and there's so much noise around a lot of things like FTX and others. But if you bring the technology down to its core value, it does three things. One is it allows a payment mechanism. Number two, it allows smart contracts to be programmed into the token. And three, because it's a general ledger, it has a source of truth. So whoever has that token, all rights in that token are granted to that person. So if I sell it to Frank, I don't have to go through a third party to do it. Frank gets it, and Frank gets all the rights. So my favorite example is Rihanna, who came out with, right before the Super Bowl, and I know she's just testing the market in this, 300 NFTs, each one worth 0.00033% royalties on one of her biggest songs. Well, why can she do that? She can do it because when Spotify plays a Rihanna song, it can capture, the smart contract executes and says, I owe royalties here. And so nobody has to be involved in it. And it can take the fractional payment and go to, because Frank's a big Rihanna fan, so it goes to his account, and he owns a couple of those, and he's paid, right? So now think about any way in which you have revenue streams or royalty streams that you can now start to fractionalize that or democratize that, and think about how that is an uncorrelated asset to all the traditional assets. So other examples is, I think that athletes are they'll sign a big contract, they'll say to their fans, I'm going to sell off, tokens worth 10% of my future revenue stream. I'm going to, 100,000 tokens, and boom, the fans are going to probably pay a premium for it. So it will be a way, and if you think about it, it's just securitization done on steroids. And it's merely that this technology is enabling it, and it's also enabling other very interesting companies that will disrupt some of the traditional business models that we have today.
Now, she is 100% correct, right? We are starting to see the entire business side of things being disrupted by this technology. I talk about it all the time, automated workflows, efficient digital workflows. It's all happening. And you know what's crazy about all of this? We really look at the tech. If we go back in time to May of 2023, this is Franklin Templeton, CEO, again, addressing that they chose Stellar because, it came down to the capabilities, the low fees, the efficiencies of the network. This is Jenny Johnson. Again, listen closely.
Well, it's so funny because I remember, I think it was in November of 2019, there was a filing that you guys had made that was picked up by, and it was the first mention of using the Stellar blockchain. And I was like, this is exactly the way that you want open technology to work. You guys looked at this, made your decisions about what you were going to do. No one had to force you. Like, no one went out and said, hey, we're going to pay you lots of money to do this. You guys figured it out. We were thrilled to see that, because that's exactly what we want to see happen all over the world. And what we do see happen, not at this scale necessarily, but small individual developers in other parts of the world can grab the technology and do it. But once we did, we were like, hey, we should be talking to them. And so we started the conversations, and it's just been so nice to watch the journey.
Yeah.
And to watch that, you guys did very methodically approach this. Yeah. And so what are the benefits that you see for?
Well, I mean, of course, at the time we were, trying to figure out which platform to use. And, I think we ended up with Stellar because of really the capabilities that you guys have that were so important for the regulatory environment, right? I mean, so this concept of being able to claw back a transaction, right? That's important. We're required to do that. If there's something that happens, you got to be able to fix some of those things, and have this control environment in which we're responsible for. And the Stellar chain allowed us to do some of those things. And then also, you guys Stellar's amazing with how cheap your gas fees are. I mean, yeah. There's nobody else that comes near that, and that's important to us and important to our clients. So it's really been I think a terrific.
So again, she's just speaking about the tech side of things, but what's crazy is it also shows you that institutions are not aware. Although, yes, listen, I love Stellar. I think the tech is great. We look at the fees, right? If we go over to Stellar real quick, we could see the fees here. Very, very small. I mean, fractions of a cent, right? Very small fees. We know how efficient Stellar is. But if we go and look at the XRP ledger, for an example, again, you have those low cost fees. Yes, still, Stellar is a lot cheaper technically, but these are fees that I look at traditional, like the traditional world, you're not seeing these fees anywhere in the traditional world. You have to adopt blockchain DLT. Even when we compare it to Bitcoin, right? The cost here is night and day. Scalability wise, night and day. Environmentally, sustainability, right? The sustainability aspect of it, night and day. But also we look at XDC, guys, XDC, it's technically, if we're really thinking about this, if we're coming down to the specifics, it's cheaper than Stellar. It is cheaper than Stellar to transact on XDC. We look at the energy consumption. We look at the transactions per second, smart contract support, instant confirmation. I mean, the tech here around XDC is very, very disruptive. It's very efficient, especially when we compare it to XDC and even XRP and XLM. Sorry. So yeah, I mean, listen, if we look at XDC, this is definitely a big winner to focus on. But also Hedera. I mean, guys, if we look at Hedera's fees, if we look at Hedera's, transactions per second, transaction confirmation time, again, night and day compared to Ethereum, compared to Bitcoin. Yes, it's a lot more expensive to transact on Hedera than, for an example, like XDC, XRP, or even XLM. But I'm just looking at this from the TradFi side. It's not about, which one of these are better than the other one. It's more so like what's going to happen when more Franklin Templetons in the world, if you will, right? Because again, we know Franklin Templeton is just a big one. BlackRock's here now, Fidelity's here. But just imagine every single enterprise, every single major player finally realizing like, hey, we could actually transact using this tech. We could transact using this tech because of the fees, the confirmation time. I mean, this is where we start to get into the specifics on just how disruptive this tech will be, especially once it is applied in the traditional world. So this is why I focus on what's happening this year. We're now starting to see the regulatory side of things accommodating for the tech. I am very excited about this. I really think everyone should pay attention right now because we are about to see some of the biggest moves being made around the space, not just from the regulatory side of things, but the adoption side of things. And this is being told to you guys by one of the largest asset management companies out there. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.